Hi there everyone, it's good your mentor and we're back again with another banger. welcome to the channel guys. For those who are new, please hit the like button, share and also subscribe as we drop quality content each and every time. Getting to the main aim of the video guys, I won't waste any further time. Today I want to teach you guys one of the most important lessons that you will need in order for you to become a professional day trader. But wait guys, before I start with the lesson, can I give you guys a heads up? Please guys, be aware of these social media scams. As you can see, people are creating fake accounts of our name and robbing you of your hard-earned money. These are the only legit accounts. Please guys, make sure you follow the only accounts that FX Gold account is following, as all those are real legit accounts, okay? Please help save the next victim. We're back again guys, back to the lesson. So today I want to talk about one of my trading account journey guys, whereby I took an account from 10k all the way to more than 100k profits in equity. I want to show you the proof I actually deposited last year. This is 10k, the 11th of January 2021. I know 10k is a lot of money for a lot of people, especially USD. But what I want to talk about guys is the lessons and actually the rules are applied on this specific account. As you can see guys, I don't shy away from losses. Losses are part of Forex, and I'm going to talk about the whole journey and basically the 5 tips that I used in order to get this account to where it is today. Take these lessons very seriously guys, as this will be one of the most biggest lessons that I want to teach you this year. What I want to talk about mainly guys is how long did it take me to do this guys. The duration. A lot of people want a 24-hour reward for 5 minutes effort, of which the world doesn't work like that guys. As long as you're not putting in the work, you will not have the result. So I want you guys to take out your pen and paper and basically prepare for the lesson. Without any further waste of time, if it's got your mentors, let's get it. Okay guys, so let's continue with the lesson. This is the 5 tips that I use to grow my 10k account. As you can see guys, we have my BTFT MT4 account. This is a real account guys, and this is real risk guys. Anyways, let's get back to the lesson. What I want to talk about guys is the importance of growing a real account guys. A lot of people are good traders, but they don't know how to apply risk. Hence, the first topic of today will be proper risk management. If you are trading real money and you have real risk, it's important for you to know how to control the risk, okay? Proper risk management helps you cut down losses guys. It helps protect traders' accounts from losing all of its capital. The risk occurs when traders suffer losses. If a risk can be managed, traders can then open themselves up to making money in the market. So it is very important for you guys to know why you need to learn on how to apply proper risk management. A lot of people know about proper risk management, but even today they don't know how to approach proper risk management. Before we even continue guys, look at my account guys. Look at the lot size I use and look at the overall equity and even account size, but look at the lot size. You see, it's very important for you guys to apply low risk. This risk is basically lower than 10% of my account size. I make sure in all instances guys, even if I'm wrong, I will never blow. Risk management is an essential but often overlooked, which creates a big problem for traders. A trader who has generated good enough amount of profits can lose it all in just 1 or 2 trades because they don't know how to apply proper risk management. It doesn't mean you're a bad trader if you don't know how to apply risk management. A bad trader if you only have losing trades, okay? You need to learn on how to apply risk management. One of the best ways on how to approach risk management is knowing that there's different types of trading, okay? First type of trading we have is institutional trading. This is the bank's approach. We usually teach you about the big banks, like the videos we've posted, part 1, part 2 of the big bank secrets. Make sure you watch those videos guys. They can teach you a lot in terms of understanding how institutional trading works. Basically, those types of trading methods are for institutional trading. We fall under the retail traders, so you need to learn on how to approach trading. I want to teach you guys the types of institutional trading approaches that they use so that we can get to benefit as well, even though we are retail traders, okay? Institutional trading involves large amounts of money, which allows institutional traders to have a great capacity to diversify their investments to avoid large losses. So what is the main aim we're learning here guys? It is important for you guys to have big capital. Hence I tried my best guys to have what? 10k deposit guys. If you really want to take forex trading sales guys, you need to learn to invest in yourself. What you need to do, guys, how you approach trading, you need to first have funds for learning and also save funds for your account. You can't learn and make money at the same time. You first learn and then you earn. So it's important for you guys, while you're still learning, you save money on your side. Save money, have yourself 10k ZAR, 10k USD, whichever you can afford. But you need to have a big enough account in order for you to survive as a trader. Yes, guys, you can even have smaller accounts if you are a scalp trader, but what I want to advise you is you need to have this type of account, guys. You need to have an institutional trader type of account, because that type of account will be your everyday account. This is the account that forces you to always be in the market and always learn every day, okay? Now, let's continue with the lesson. Institutional traders also have access to better prices in the market, can even directly influence price movement of the assets by exchange. As you saw, guys, on the previous videos, we posted the big bank secret, guys. We have a big problem with institutional traders whereby they do forex rigging. So basically, this is what I mean right here, guys. This is when we see institutional traders are causing a lot of manipulations in the market. So it's important for us, guys, to make sure we are always with part of the 2% or the 1%, which is the institutional traders. Every time they go against retail traders, we want to find ourselves on the safer side. Institutional trading, guys, big banks are the ones who are actually controlling the market. In fact, trading game is the battle amongst institutional traders to try to control the market and drive it towards their interest, okay? The impact of institutional traders in the market can always affect price, all right? Every time you see this big moves, small moves, is usually institutional traders who are controlling the market. And as retail traders, guys, we don't have large amounts to trade as institutional traders. This is why we fall under the 98%. So I'm going to teach you an approach that you need to apply on your account in order for you to not blow. The first thing you need to know, guys, institutional traders never blow accounts. Why? Because of the risk. They always risk 1% or even less. I'm basically going to give you guys an approach that institutional traders use, and I'm going to teach you guys on how I apply it as a retail trader, all right? Firstly, they use the 1% rule. The 1% rule is for institutional traders. This limits the risk on the given trade to more than 1% of the total account value of the entry you took, okay? So traders can risk 1% of their account by trading either large positions with tight stop losses or small positions with stop loss placed far away from the entry place, which is what I usually do, guys. You're gonna see that today I actually removed them. I don't usually like to have my stop loss and take profit targets when the market is closed, because I know there's a lot of forex rigging. The institutional traders or even brokers can like to stop hunt me. Basically, I'm trying to avoid manipulations, all right? I always make sure that when I have my stop loss target, I have it very low, and my take profit target, I have it very high. Reasons because of the lot size I use. My stop loss, I always make sure that I place my stop loss in an area whereby I know if the market reaches it, it will invalidate my setup. I don't just place my stop loss because of I don't want to lose such and such pips. Basically, I'm trying to avoid having a lot of stop loss hunts, all right? When you have a 10k account or even less, you need to understand that you fall under retail traders, okay? We need to learn how to apply the 1% strategy for ourselves. So this is the approach that I use to make sure I'm able to fall under the 2%. So guys, number one thing, I know that on my small account, I can use 1% because I won't be able to profit from such small targets. I need to make sure that I at least have enough profit for a day to make sure that I'm able to continue tomorrow. I apply the 5% or 10% rule. I always make sure that I risk only 5% or 10% of my account size, depending on the type of entry it is, guys. We know there's a high probability entry, low probability entry, and medium probability entry. But as long as I have a high probability entry, then I can risk 10%. But if I have a medium to low, then I risk only 5%, okay? I make sure I risk small. Reason is because I'm not saying that I'm a god. Even though I know I'm good in trading, I'm not calling myself a god, because I know that we have the institutional traders who are trading against us, okay? If you want to really make a lot of money, you'll probably have to establish multiple streams, guys. This is the account that basically makes me. I'm able to trade this account each and every day because this is my investment account. I need to have a lot of streams, guys. In order for you to do this, you need to have multiple streams of income. I'll be honest with you guys. You cannot become a forex trader as long as you don't have an income. It's going to be difficult for you in order for you to pursue your career. Why? Because one, you need money to make money. In terms of forex trading, that's how it is. And as long as you have less money, it's going to be difficult for you to not fall under the institutional traders, meaning that you'll always fall under the retail traders which puts you at a disadvantage. Okay, so learn on saving before depositing, guys. So guys, that's the first lesson. The first lesson is proper risk management. I don't want to waste too much time talking, guys, so let me go through the second lesson, which is don't break your rules. This tip, guys, I want to teach you on how to become disciplined. A lot of people are able to learn things, right? But what they suffer is what? Discipline. You need to learn to not break your rules, guys. Okay, number one tip, I use proper risk management, as you can see. The second tip is that I didn't break my rules. As you can see, guys, I'm still using small lot size even today. Step one, have a trading plan, guys. You need to have a trading plan in place. On your trading plan, you need to backtest in order for you to develop confidence and have a strong understanding of the strategy that you are using. Like anything in life, practice makes perfect. In order for you to approach the market with understanding, in order for you to be disciplined, you need to have a trading plan. Okay, the second step I want to give you guys, always assume the worst, guys. You need to have total responsibility for everything that's going to happen to you. Try to imagine extreme scenarios. You'll be better prepared for negative things that might happen to you. When you do that, you'll be at a better chance to stay longer in trading, because you already know what happens if you don't apply risk. Anyone who doesn't apply risk blows account. So always assume the worst, always be prepared, always be ready, and always be safe. You need to learn on how to not repeat mistakes by not doing the same things over and over again. Be disciplined enough to know this is a mistake and you don't want to repeat it. All right, so this is the third and last step that I use in order for me to practice on how to be disciplined. You need to find your weaknesses, guys. Find your weakness and work on them. Once you find them, guys, eliminate. Number one, you can develop a diary or write on a notebook and write all your daily trades. Figure out what is going wrong and how can you improve by not repeating the same mistakes over and over again, guys. You need to review yourself. I've repeated this more than 100 times, guys. From all the videos we've dropped, I'm pretty sure I've said this before. If you can't review, you can't improve. If you can't review, you can't improve, guys. Do not lie to yourselves, guys. You need to be able to check yourself, guys. You need to be able to review yourself to see that whether you are a growing tree or you are stuck in the same place. Why? You need to analyze yourself on a daily basis. You are your most important asset in your trading business, guys. Understand that trading is a business, and logically, you just spend more time trying to analyze your actions. Part of your analysis should include analysis of your feelings towards trading, like major things that are going to happen outside of your life. Those things that happen outside can affect you internally. Why? Because you can bring your emotions into your trading account, and of which we don't want emotions on trading. You need to be as emotionless as possible, that which is part of psychology, guys. In order for you to be disciplined, you need to learn to have a strong psychological approach. Okay, so the more you are aware of those issues by writing them down and probably on your notebook, the less control they have over your life, guys. Trading is like that. As long as you are able to control your life, you are able to control trading. Trading requires you to have a proper life. As long as your life is messy, your trading will be messy. It teaches you about life. You need to be disciplined. You need to follow your rules. You need to stick to the plan, and even the same thing needs to be applied in real life. That's why trading is a business. So you might ask yourself, on how are you able to check whether you are disciplined enough? Ask yourself this question: did you follow your rules? If yes, then pat yourself in the back. That is wonderful, right? That is wonderful. It is better to lose money on days that you're following your rules than to make money on the days you're breaking them. Why? Because if you continue breaking your rules and you make money, you're gonna continue with the wrong thing, and eventually you will what? You will fail. So it is better to lose on the days that you're following your plan than making money on the days that you're breaking your plan. The point here I'm trying to make is consistency, guys. Consistency is reached through persistency and great discipline. As long as you want to achieve greatness, you need to learn consistency and you need to be disciplined. All right, so that is the second tip I want to give you for today. Now I'm going to my third tip. With my third tip, guys, I want to show you with the aid of my real account as the third topic, understanding market structure. I'd like to first explain what does market structure mean. Market structure is the behavior, condition, and also current flow of the market. It highlights your support and your resistance levels, guys. You see your swing highs, your swing lows. A trend is simply a consistent direction of a price movement over time. Market structure, guys, that can tell you if the market is trending or not. Basically, if the market is trading towards the upside, that's how you can tell that you have a bullish market. If the market is then trending towards the downside, that's when you can see that you have what? A bearish market. But if the market is just going sideways, that's when you know you have consolidation. Understanding market structure can help you to understand that it's better to hold buys in a bullish trend. Same thing as I did here with my Nasdaq trade. So yeah guys, I'm in my trading view now. One thing I'd like to tell you guys is that we like to analyze on trading view. That way I can still stay updated about my analysis. Whoever is analyzing with the MT4 platform, you will one day see your analysis gone. Basically what happens when you analyze on your iOS platform, MT4 platform, or even Android platform, over time your analysis will be removed. So it's not really safe to analyze there. I would recommend that you analyze on your trading view. Take forex trading seriously and it will pay you seriously, alright? So as you see guys, under our Nasdaq trade we have a possibility the market might go towards the downside. However, we're gonna have to wait and see in terms of how low can the market really go before we go back into our bullish movement. Now back to the matter at hand guys, I wanted to show you that we used to have what? A bullish movement towards the upside. Hence you see that under my Nasdaq trade, I actually entered a lot of bullish trades. Let me show you. Basically guys, as you can see, I actually entered this trade right here because it was a bullish market. And right now, the market might actually start to change direction. After understanding market structure, you need to make your winners bigger than your losses, guys. This is the fourth tip for today, guys. Make your winners bigger than your losses. What I mean by this, guys, is as long as you are able to hold losses, guys, it's very, very, very important for you to also learn how to hold wins. Same thing as I'm doing, guys. Most of you guys are able to hold losses for this long. Why is it that you are able to do the same thing with your winners? You must be able to hold your wins. In fact, you must always make sure that you have more profits than your losses. Make your winners more than your losses, guys. These are the only things that are supposed to reflect in your trading account. Number one, big win, small loss, break even, but never a big loss. As long as you don't have a big loss, guys, your account will eventually grow. Why? Because you have a big win. Basically, guys, same thing with my account here. As long as you can see that I'm able to have big wins, I'll always grow. Let me go to my account history, guys. I want to show you the importance of controlling your losses, guys. Losses are there. Losses are part of Forex. But I want to show you the difference in terms of why you never take big losses, guys. I actually took 2 big losses in this account, guys. And from those 2 big losses, guys, I promise you, I changed. This is still medium types of losses based on my account size, okay? So you can have these types of losses. But as you can see, guys, a lot of people, when they have losses, they always tend to blow accounts. Why? Because they didn't teach themselves on how to apply risk. I always make sure that I risk what? 10 or 5%. For me to have a loss of 2k USD was probably because I had a high probability trade and my high probability trade was wrong. It's okay, guys. It doesn't mean that I won't trade again next time. I take a loss, after that I come back. Every time you get a setback, you're supposed to have a comeback, all right? So now going to the method at hand, guys. As you can see, guys, look at this. This is wrong. As you can see, the loss size here, guys, the loss size was 0.20, same as the other ones, but only difference is, besides it being German 30, the difference was how long did I hold this loss, guys. So if you hold on losses, you will have big losses, guys. It's important for you to cut losses short. Never have a big loss. I learned from these 2 big losses. Ever since then, guys, I made sure no more big losses, and eventually you grow. That's how it should reflect, guys. In paper, as long as you have a medium win, a big win, a small loss, and a break even, you are winning. You will eventually see growth. So it's very, very important for you guys to understand why your winners must be bigger than your losses. Now, lastly, guys, it will sound like a joke. A lot of people don't take this seriously, guys. Practice each and every day. A lot of people say, yes, I'm going to practice each and every day, but is it actually happening? Because when you trade in your real account and then you blow it, what happens? A lot of people I know take a long break. Who said there's no demo account, guys? Like, really? Who said you can trade on a demo account? When I say practice every day, guys, focus on the skill. Focus on sharpening your skill and less on the money. As long as you have the skill, you will have the money. It doesn't matter how much you have right now. What matters is, do you have the skill? Do you have the skill to make money? So it's important for you to focus on your skill, even on a demo account, guys. In fact, it's important for you guys at a beginner stage to focus more on a demo account than a real account. Why? On a demo account, guys, you get to do mistakes, silly mistakes that you would have done on a real account. You get to learn them there. do those silly mistakes, and then when you go to real account, you only learn the last thing, which is psychology, which is discipline, which is what I'm teaching you right now. Practice each and every day. If you reach this far into the video, thank you so much, guys. We appreciate all the love and support. More lessons are coming. Stay tuned. If it's good, your mentors signing out.